Hello, I am Mani Malarvannan. In this video, we will look into real-world asset tokenization. We will go through the step-by-step process, how we can digitize and tokenize real-world assets. In last week video, we talked about the fundamentals of asset tokenization. If any of you have any questions, please watch that video before coming to this presentation. As we discussed in the last video, the real world asset tokenization is basically tokenizing any real world entities like building, house building, or art, or stock market. Any of those things can be made tokens and we can able to transact in blockchain. And what is the real world asset tokenization? So one more time we can go through it and we can understand. Uh, each token represents a real world entity. It could be a one-to-one. For example, one house can be represented as one token, or one large building can be represented as million tokens. So in this case, if the building value is 1 million, then each token would be $1 because we are minting 1 million tokens for the 1 million building value. So once you mint the tokens, then users anywhere in the world, they can able to purchase the token and they can own the fractional piece of the real asset, in this case the building. Again, there are a lot of legal regulations we need to go through before we can decide who can purchase the token and who can sell the token to somebody else. We will go through that, but for now, understand that any real world entity can be converted into a token and it can be used in blockchain. And also, other aspect of the tokenization is the on-chain settlement. You can able to transfer your token from your own wallet to somebody else wallet. Whoever wants to purchase the token, they can able to purchase it. For example, when you purchase a token, the value could be $1. After couple of months or couple of years, the value may go to $2 or $1.10. In this case, you can able to transfer or sell the token to anybody who wants to pay the fair value for the token. And all those transactions that needs to happen, there needs to be a legal wrapper around the token. The main reason we need to have a legal wrapper is that it is still none of the country is not legalized these tokens. What I mean by legalized is that if you have a house, if you have any type of a physical property in US or in any of the country in the world, you will own some documents that shows you are the ownership. And if there is any litigation, any issue happens, then you can go to the court and you can show the papers and you can show that you are the true owner of that particular property. That is the same in many countries, in most of the countries that I know. In case of tokenization, that's not possible because the legal structure is still evolving, and there are a lot of countries, they are looking into it, coming up with a legal framework so that it can be considered as a legal asset, legal ownership, whoever wants the token. So to sell any tokens, you need to create a legal wrapper. We'll talk about what exactly the legal wrapper in the next presentation slide. But for now, consider you need to have a legal entity that represents the physical asset, physical building, and the token that has been transacted in a blockchain. So for that, we came up with a concept. We means the blockchain community came up with a concept, SPV, special purpose vehicle, that is created. It could be anything based on the country. For example, in US, you need to create a company, LLC, and need to register wherever you want to register. And then that company owns the building so that if any case of any issues, then the legal local laws can be applicable to that company. And then that company can mint tokens, either 100 tokens, 1,000 tokens in the blockchain, and that company can sell the tokens to whoever wants to purchase it. So that is the overall process, high level process of tokenization of any asset. So let's go through step-by-step process in the asset tokenization. It is a 10-stage process. The first and foremost thing is the identification, asset identification. You need to identify what exactly you want to tokenize. It could be a building, it could be a residential building, it could be a office building, or it could be any fine art, jewelry, anything that can be tokenized in the blockchain. First, you need to identify it, and then you need to create a legal structure. That legal structure varies from country to country. You need to understand what are all the legal frameworks you need to understand to create the legal structure. Because if the property or asset is physically wherever it is located, then the local laws and rules needs to be applicable for that particular entity that you want to tokenize it. For that, you need to create a local structure. That's the one we talked about in the previous presentation, SPV. So, special purpose vehicle, you need to create a special purpose vehicle. It could be anything. It could be a LLC, it could be a S corp, whichever legal entity you need to form based on the country the physical asset is that needs to be created. And then you need to create the valuation and fractionalization. That's basically if the building value is say 100K, you need to decide whether you want to create 100 uh, tokens, each $1,000, or 1,000 tokens, whatever may be the structure, total number of tokens you want to create. You need to decide that so that you can sell the tokens for appropriate values. And then you need to make sure that you work with the complaints framework so that any type of complaints third party company can able to verify that your legal entity is successfully formed and you have the building is already you own it. All those are all is needs to be properly formatted so that any type of third party and company can able to verify whatever you are selling, whatever you are tokenizing is all following the legal structure. For that, you can use tools like chain analysis sentinel tool. So this tool is pretty popular and it can able to verify various points, who the person is, who the entity is creating the tokens, what are all the legal frameworks they need to follow, and if they are following all those frameworks, they can able to check it and make sure that legally you are following all the steps that needs to happen. And then you need to identify the technology stack. In the technology stack is you need to identify which blockchain you want to tokenize. You can use Ethereum, Polygon, or Solana. There are many different blockchains are there. You need to identify which blockchain you want to tokenize. And also you need to identify what are all the different token standards you need to follow. For example, in Ethereum, there is a ERC20 and ERC3643 token standards exist. And then in Polygon, uh, we have a SPL exist. So you need to, I'm sorry, SPL is in Solana. So you need to understand these interfaces and make sure which one you choose and then implement it in your smart contract application. So once you decide and build your smart contract application, you need to test it and make sure everything works well. And then the next step is to deploy the smart contract application. For that, you can follow, you need to follow many audit processes so that you make sure that none of your contracts has any security vulnerabilities for anyone to steal the tokens that you are going to mint. For that, there are various external audit entities are there. Open Zeppelin, Certic, or Trail of Bits. So all these tools and technologies, external tools, you can use it to verify that whatever that smart contract application you created conforms to the standards. It doesn't have any security issues. And then the primary issuance. So before you issuing a token to anybody who is interested to purchase, you need to whitelist the investor's wallet. So what it means whitelisting is that you need to make sure that whoever wants to purchase the token, they can able to legally purchase the token. Say, for example, if you have a property in US and if you have a person trying to buy in a country that US doesn't approve it, you can't sell the token to the person who is having a wallet in a different country. So you need to make sure that you understand those legalities so that you comply the legal rules and regulation on each and every step of the process. So once you understand that, and you need to use the tools to check to make sure that you are not violating any of the laws, local laws. And then once that step is done, then you can able to sell the your tokens in the secondary markets like DEX pools on multiple other platforms. You can able to successfully sell it. See, whatever the process I am talking about, the 10-step process, it's a very high level. So if you want to follow in each and every step, you need to go through multiple different processes to make sure that you are following all the technology aspect of it, legalities, regulations, and everything, so that you are not violating any of the local laws. Some of the token standards and the legal structures we talked about in the previous slide, ERC20, that is the utility token, that is like a stable coin. We will have a separate presentation about the stable coin because multiple different users are asking about the stable coin presentation. I am working on it, but for now you can consider stable coin is the legal representation of the actual dollar. If, for example, in US, there are stable coin exists that represents US dollar. Instead of if you have a $1, then you can have a one stable coin. So that is the standard that ERC20 provides it. And then the other standard is ERC721. So that you can use it to create the deed, just like how the real estate deed works. So it follows those rules. And then ERC 115 is a basket of assets of mixed functionality. If you need more information, let me know. I can have a separate presentation for each one of the standards. There are a lot of standards exist. So I am again going through at the high level so that you can understand what exactly is going on in the asset tokenization and why it is important for anybody, specifically in the marketing, Web3 marketing space, how it's going to mature in the next couple of years. And then the other one is ERC 3643 and ERC 1400. These are all regulated securities within built-in compliance. That's again, it's a complete set of standards you need to understand so that you can able to appropriately choose which one you want to use in your asset tokenization procedure. The legal structures, we talked about SPV. So before you create any tokens for any physical assets, you need to create a SPV so that you can able to follow the local laws and regulations so that you are not violating any of those rules. For that in US, there is a Delaware, the trust, you can use it. And also, I'm sure in other countries, there are legal frameworks you need to follow to make sure that you can able to successfully represent real world asset in the blockchain. And then we talked about the regulatory landscape. It is still evolving. In US, the SEC is exploring on-chain 40 Act funds. It created a proposal and they are still working on, and a lot of companies, a lot of entities, a lot of consultants are working to legalize the entire tokenization process. In European Union, again, the initiative started in 2023. It is still going on. And I hope in the next year or so, all those legal frameworks will be established for anybody to purchase tokens. And then the United Kingdom, they are also working on the legal framework so that companies or legal entities can able to be formed so that they can successfully tokenize the assets that are in UK. Then the Singapore, Middle East, there are actively they are working on to legalize. And in Abu Dhabi, they recently they approved the tokenization treasury bill. It's called R bill last year. So that is getting popular. And I'm pretty sure in the near future, almost all the companies will come up with set of regulations that's going to work for their local assets so that companies can use their legal framework to tokenize and they can able to transact their assets in the blockchain. There are some of the case studies that I can able to talk about in this slide that is actually happened in US. BlackRock created a build fund and it's been pretty active in using that. US treasuries and repos can be purchased through their tokens that they are selling on the blockchain. And then the SBC, it is tokenizing, it tokenized the gold that are there in UK London vaulted gold bars basically. So any representation they have in that vault that can they are selling it as a token, and whoever wants to purchase it they can able to purchase it. Again, there are restrictions who are all can purchase. That is based on their standards that they set it in their framework. And then Franklin Templeton created a Benji uh, token, and using that SEC registered fund with a share can be purchased that has been transacted in on-chain. So there are several different entities, companies are coming up with different legal frameworks, and then this also helps wider acceptance of wider market. And with the US current government is a pro crypto government, so you can expect to see more and more frameworks are formed and more legal structure is being created in the tokenization process. Following are some of the future trends in the next to 5 years that you can consider that is going to happen. The first thing is the DeFi integration. See, once you have the collateral, once you have the token, uh, digital assets in the token form, that can be collateralized and you can able to get interest if you want to keep that as a collateral to get some money out of it, and you can able to do so. It is right now it's not possible. If you have a asset in say India, you cannot able to sell it. You can able to sell it if you own it and get the entire money transact from Indian rupees to US dollars, but you cannot tokenize it. You cannot sell that for US based customers, but that's going to happen sooner than later. And then interoperable identity. Right now, if anybody want to purchase token, they have to have a wallet, and also if they are going to transact in Ethereum blockchain, then they have to have a Ethereum blockchain wallet. And if they are going to transact in Solana, they are going to have a Solana wallet. So each and every time the same person will be having multiple wallets, and that is kind of changing. Pretty soon there are multiple standards are coming so that one identity using that one identity they can able to transact in multiple different blockchains. So that is going to happen. So from the user's point of view, it is a good aspect because one person can have one wallet, and using that one wallet he can able to transact in multiple blockchains because his or her identity can be authenticated using the technology, so that one identity can be used in multiple transactions. And also other aspect is coming in the green and ESG assets. So with the verifiable carbon credits, they are getting tokenized, and then renewable energies are all getting tokenized in blockchain so that companies and individuals can purchase in the primary market or in the secondary market, they can able to transact. So that's a interesting aspect that is going to happen. That is already happening, and in the near future, there is going to be more trend towards the tokenization of carbon credits. And then the final one is the CBDC integration, central bank digital currencies. So many countries are thinking of coming up with a digital currency for their local currency. For example, US is considering coming up with a digital equivalent of US dollar, and also other countries thinking about it, how they can able to come up with a digital representation for their physical currency, and then using that you can able to transact on the blockchain. Again, these are all high level think tanks. They are working on trying to come up with the regulation and everything. So based on my research, it is going to happen in the next 5 years. As I said earlier, with the current US, in the current government is pro crypto, there are coming up with a lot of legal frameworks so that the individual user can safely transact in the blockchain. So that's going to happen in the next 5 years. So that's all I want to discuss in this presentation. Again, these are all very high level steps that I talked about how to tokenize. So from the marketing point of view, if you are a Web3 marketing agency or a Web3 marketing manager, you need to understand this from the high level so that you can able to help the customers to market, to attract more customers coming and purchasing the token. Say, for example, if a company is creating asset tokenization. Once the asset tokenization process is completed, they want you to be their marketing agency to attract more customers and create a community around their token systems. For that, if you understand this process, then you can able to help your customers to attract the community, and thereby they can able to sell more tokens to their customers. That's all I want to discuss in this presentation. And if you have any questions or comments, please let me know. And we have an analytic kit platform that you can do analytics from the Ethereum blockchain. Using that, you can able to do analysis on any type of transaction that happen. It could be a token transfer, it could be a crypto purchase. So if you need more information, please visit our site analytickit.com. And if you want to access our platform, visit dpa.analytickit.com. You should be able to register and start using it for free. Thank you. Appreciate your time. Bye.